All right, welcome to this highly confidential VC-style data-first explainer. Let's get right into it, because right now, modern enterprises are hitting a massive operational roadblock. We are talking about the completely chaotic, almost unmanageable fragmentation of individual AI tools just being deployed haphazardly across different departments. It's a mess. So today, we're reviewing the recently updated AUTONOVA Series A data room, a company literally built from the ground up to solve that exact problem. Now, this specific presentation, labeled version 2.3, was strictly marked confidential and just updated on June 4th, 2026. We're skipping all the usual introductory fluff today and going straight to the core, hard metrics that actually matter to venture capital investors. If you're evaluating high-growth tech opportunities, this is exactly the kind of executive briefing you need to analyze. We're going to break down the key numbers that tell the real story of this company's current trajectory, their fundamental business model, and of course, their future potential. So let's start with exactly what they do. AUTONOVA is an enterprise AI orchestration platform. Boom! That's their core category and product positioning clearly stated right out of the gate. No confusing buzzwords masking a lack of substance, just a precise, no-nonsense definition. As we just mentioned, companies are rapidly adopting all sorts of artificial intelligence tools, right? But managing them effectively at scale has become an absolute logistical nightmare. An orchestration platform like AUTONOVA acts as the central nervous system for all these operations. It seamlessly connects, standardizes, and manages different AI models and workflows across an entire enterprise. Basically, it takes a total chaos of isolated AI experiments and turns them into a unified, rock-solid piece of secure corporate infrastructure. Okay, let's dive into this, because this number right here is the foundation of the entire investment thesis, $120 billion. This is AUTONOVA's total addressable market, or TAM. We are just letting the sheer scale of this number speak for itself. A TAM this immense, it tells us right away that they are not playing in some tiny niche sector. And crucially, this isn't just a theoretical pie-in-the-sky number pulled from thin air. This $120 billion market is specifically driven by rapid, really urgent adoption across finance, manufacturing, retail, and the public sector. So they're operating in a truly massive, high-stakes arena with an incredible long-term ceiling for growth. When investors look at a number like $120 billion backed by those specific, heavy-hitting verticals, they see a runway that can support a monumental valuation, assuming the company executes its vision correctly. But hey, a huge market doesn't mean anything without actual execution, right? And that's exactly where this crucial figure comes in, $4.2 million. This is AUTONOVA's current annual recurring revenue, or ARR. Delivering $4.2 million in recurring enterprise revenue, that demonstrates immediate, undeniable market traction. But look, in the venture capital world, current revenue means absolutely nothing without velocity. And this is where the data room gets incredibly compelling. That $4.2 million represents a staggering 312% year-over-year growth. I mean, wow. And even more impressively, they are operating with a 142% net retention rate, or NRR. What that means in plain English is that their existing customers aren't just staying on the platform, they're expanding their spend significantly year after year. Reaching this level of ARR, paired with triple-digit growth and massive retention before you even hit a Series A round, that is a definitively strong signal of proven product-market fit. Now, what's really interesting about this slide is, generating top-line revenue is one thing, but actually keeping it is entirely another. This 82% figure represents their gross margin. An exceptionally strong 82% gross margin is basically the hallmark of an elite software-as-a-service company. It signals highly efficient unit economics, meaning the actual cost to deliver their software to each new customer is remarkably low. But what really protects and scales this incredible margin is their underlying business model. Recently, AUTONOVA successfully shifted to a partner-led distribution model. This was a brilliantly strategic move that rapidly reduced their customer concentration from a highly risky 74% all the way down to under 40%. So, as AUTONOVA scales its platform, it can do so highly profitably, with a really well-diversified client base, keeping the vast majority of every new dollar earned to just reinvest straight back into aggressive growth. So, bringing it all together, this slide brilliantly illustrates the overall health of the deal by consolidating those rapid-fire top-line metrics into one clear executive summary view. You've got the staggering $120 billion TAM, the $4.2 million in current ARR proving that undeniable market traction, that stellar 82% gross margin proving their efficiency, and the target round size of a $15 million Series A. Looking at these numbers side by side, it really paints a highly compelling picture of a company with massive market potential and proven demand. But, an objective, rigorous executive summary absolutely must address risk. AUTONOVA's data room actively outlines and mitigates three primary risks. First up, market competition. which they're actually offsetting by widening their moat through that aggressive partner-led distribution model we just talked about. Second is execution risk, and that is actively mitigated by their proven operational 312% year-over-year growth engine. And third, underlying tech dependencies. Because AUTONOVA is an orchestration layer, it inherently diversifies risk by allowing clients to easily plug and play multiple different AI models. That ensures they are never ever locked into a single failing underlying technology. Which brings us directly to the core opportunity at hand. The ultimate purpose of this June 2026 data room is to secure a $15 million Series A investment. This is the exact amount of capital AUTONOVA has calculated is required to take their current, highly efficient revenue engine and absolutely supercharge it. And let's be real, venture capitalists don't just write $15 million checks for generic fuel. They demand precise allocation. AUTONOVA has a strict use of funds mapped out here. 40% of this capital will go directly to sales and marketing to aggressively capture market share in those key verticals. 35% will be injected into product development to maintain their razor-sharp technological edge. And the remaining 25%, that's allocated to operations, to structurally support this rapid, massive scale. So we finally arrive at the critical decision point for any venture investor reviewing these initial, highly confidential numbers. With $4.2 million in recurring revenue already secured within a towering $120 billion market, accelerating at 312% year-over-year growth and boasting a 142% net retention rate, are you ready to open the data room? The full detailed PDF presentation awaits those who are ready to dig deeper into the actual mechanics of this Enterprise AI Orchestration platform. The metrics we've explored today absolutely demand attention. The only question now is, what will you do with this information?